Hello and welcome. Let us continue learning about candlesticks. Now, if you take any candlestick chart, you will look at these three types of candles: long range candles, short range candles, and normal candles. Okay. The long range candles will be very long. The difference between the high and the low of the candles will be very large. The short range candles will be very short. The distance between the high and the low of the candle will be very small. And in between the short range and the long range candles are the normal ones. Okay. Now, the short range and normal range are subjective, meaning when you look at a chart, you may feel a candle is of short range, but I may feel that the same candlestick is of normal range. Okay. So this varies from person to person, and there is no hard and fast rule as to decide whether the candle is short range or normal range. Okay. Now, you can see long range candles when you have either good news about the stock or when you have bad news about the stock, or when the market sentiment is good or the market sentiment is bad, or when the stock or when the price is breaking resistance or breaking support. Okay, you can see short range candles at the end of a trend. Okay, when you have short range candles, it means that buyers and sellers are waiting for external factors and are not able to take decision right now. Okay, the short range candles says that the buyers and sellers are in a state of indecision. Okay, you'll see this or these at the end of a trend or at the middle of a trend. Normal candles, you can see, you can find these candles everywhere else. All right. So these are normal and nothing much special about them. Now, when we talk about candlestick patterns, they are categorized into various headings. We have single candlestick patterns, we have two candlestick patterns, we have three candlestick patterns, and we also have more than three candlestick patterns, which we will not learn about now. Okay, we will start learning about single candlestick patterns and then proceed to two candlestick patterns and then three. Okay, so let us start with the first single candlestick pattern, which is Marubozu. All right, now this is a Marubozu candle. This is the original Marubozu candle, and these are the variants of it. In a Marubozu green candle, open will be equal to low and close will be equal to high. And this represents the buyer sentiment, and it says that the buyer sentiment is very strong. Now, when you look at this candle, what can you understand? You can understand that the market opened at this price, then it moved up, maybe it went down to, it moved up, went down, moved up, went down, and by the time the market closed, it closed at this point. From the moment the market opened, the price did not go down. If it had gone down, you could have noticed a wick here. And by the time market closed, it was also not able to move up and come down, and so the upper wick is also absent. Okay. Now what does this say about buyer sentiment? Buyers were so strong that they did not give sellers a chance. Okay. When the market opened here, buyers kept on pushing the price up, up, up and up. Sellers might have tried to bring the price down. We do not know. To know that, we have to go to shorter time frame. Okay. They might have tried to bring it down, but still they were unsuccessful. The buyers kept pushing up. Maybe the sellers pushed down. They kept moving up, 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 and by the time market closed, they closed it here. Okay. The sellers were not able to move the price below the opening price, and here they were not able to move it down. This is what we can understand by green Marubozu candle, that the buyer sentiment was very strong. Now this is also considered as Marubozu. This is also considered as Marubozu. This is also considered as Marubozu. These two have names. Okay, these two have names, which I think is not necessary for you to remember. Okay, this is called as green opening and this is called as green closing candle. Alright, do not worry about the names. Now let us look at this. Market opened here. Buyers pushed the price up. Maybe it moved down. Then once again they pushed it up. Sellers pushed it down. We do not know that. I am just saying sellers might not have pushed the price down. Okay. So it moved up, price moved up, price moved till here, but then sellers came at this point and they pushed it down, but still buyers were able to close the price at this point. Okay, even though there were sellers, the strength of the buyers was much more than the strength of the sellers, and that is evident by this green body. And so we consider it as Marubozu. Same as this. So price opened here, it moved up, sellers came and pushed it down, but then once again at this point buyers came up and with very strong force they pushed the price up, 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 and it closed here. Okay. Same way we have two wicks on either sides. Alright. So this is Marubozu candle. This is the actual Marubozu, but we also consider these as Marubozus. Now, the main thing that you must remember is this concept holds good for every time frame. Okay. Now, I took the example of day. I told you that when the market opened, it opened here, and when the market closed, it closed here. But if you take any time frame, 1 minute, 3 minute, 5, 10, 15, 30, 1 hour time frame, 1 week time frame, 1 day time frame, 1 month time frame. If you take any time frame and if you look at the candle and if it is a Marubozu, then it says the same story, that the buyers were the strongest in that particular time frame. If you consider 5 minutes, then at the beginning of the first minute, buyers started here, and by the end of the 5th minute, they closed it here. Okay, so this holds good for all the time frames. All right. Next, we have red Marubozu, which tells about the sentiment of sellers. Sellers, or I can say the price opened here, and the sentiment of sellers was so strong that they kept on pushing the price down. Maybe the buyers tried to move it up, but they failed because once again sellers came strong and pushed the price down, 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 and when the market closed, it closed here. the sellers were not able to push the price above the opening price, and they were not able to take it down and move it up too. Okay, and so we have no wicks on either sides. So this is a clear indication that the sellers were strongest in the time frame considered. Okay, now these are also considered as Marubozus. All right, so this is red closing, this is red opening. You don't have to remember the names, but they too are considered to be Marubozus. Price opened here, it moved down, sellers came and pushed the price up, they were able to take till here, but then once again sellers came at this level, pushed the price down, and it closed here. Okay, same is the case here. Price opened here, it went down, kept on going down, it went down till here, buyers came and pushed the price up, but once again sellers pushed it down, and they were able to close it here. Okay, same is the case here. Even though buyers were present here, the strength of sellers was much more than the strength of buyers, and that is evident by the big red body. Okay, so this gives you the sentiment of sellers, and the Marubozu in itself can be observed when we see breakouts. All right, now let me go to my dashboard and tell you few important things about candlestick charts. All right, I have opened up few charts here which I will take as example and tell you some things about them. If you look at this chart, you can see the chart is not very good. All right, you can see few candles here, but if you zoom in, you can see these horizontal lines. Correct? Now these lines are nothing but stocks hitting upper circuit. Now, what is upper circuit, what is lower circuit, do not worry about it. But see, this is not a candle, this is not a candle, this is just a line. Okay, this is just a line, and we do not want lines like this in our candlestick chart. All right, so if you see here, you can see multiple horizontal lines, you can see many horizontal lines here. The liquidity will be very low here, and these would be probably the game of operators. Okay, operators are people with a lot of money who have the capacity to move the market in the direction that they want. Okay, so do not pick a stock which has a chart looking like this. Here is one more example. All right, so you can see horizontal lines here, you can see horizontal lines here, you can see lines here. Let me zoom in, you can see lines here, you can see lines here. Okay, see, you can see multiple horizontal lines here. This is good, these are valid candlesticks, these are valid candlesticks. These are not good, and so you must avoid such stocks. All right, now if you look at this chart is very good. You cannot see any horizontal lines here, all you can see are candles. Similarly, this is also a very good candlestick chart, you cannot see any horizontal lines here. All right, now let me give you an example. Let me select Paytm. Okay, I'll select Paytm, and if you look at Paytm, there is this gap. You can see the stock hitting lower circuit here, and here. This is fine. This is fine because this was the result of a bad news. Okay, and right at this point, good news came in and it hit upper circuit. Once again, this is fine. This is fine. Because if you consider the entire chart, all you can see are candles except here, here, here and here. Okay, this is fine. If a candlestick chart has proper candlesticks with few lines like this, then you can assume that the chart is good, but these are all result of some news. Alright, but what you do not want is a chart looking like this. Okay, you can see this, correct? So this is not a good sign. Alright, now I have explained about short range, medium range and long range candles, correct? Now this is a long range candle. The distance between the high and the low of the candle is large. This is not a Marubozu because you can see a big wick here. You can see a big wick here. This is also not a Marubozu. Okay, this is also not a Marubozu. This is not a Marubozu. This can be considered as Marubozu. See, the price started moving from here. There is no lower wick. It moved till here. It has a small wick, but you can consider it as Marubozu. Okay. So this is normal candle. This is short candle. This is short range candle. This is normal range candle. This is short range. This is normal range, and so on. Okay. This is short range. And as I said, what appears normal to me might look short to you. What looks short to you might look normal to me. Okay, so this is subjective, and this also doesn't matter right now. Okay, do not worry about it. All right, yes. So this is about the candlestick charts. From the next video we will start learning about single candlestick patterns. All right.